Welcome, fellow investors, to our channel, where we unlock the secrets to building wealth and achieving financial freedom. Today, we're diving into a topic that's near and dear to every investor's heart: exchange-traded funds, ETFs. Specifically, we'll be discussing the 6 best ETFs to buy and hold forever, the cornerstone of a millionaire's portfolio. These are the core components of a millionaire's portfolio. So, whether you're a seasoned investor or just starting, stick around as we explore these game-changing investments. Stay tuned, because the journey to financial freedom begins now. Why ETFs are such powerful investment vehicles. But before we dive into the specifics, let's take a moment to understand why ETFs are such powerful investment vehicles. ETFs offer investors the opportunity to gain diversified exposure to a wide range of asset classes, sectors, and markets with the convenience and liquidity of a single investment. ETFs provide a cost-effective way to build a well-rounded portfolio that can withstand market volatility and deliver consistent returns over time. In today's fast-paced and ever-changing financial landscape, finding the right ETFs to include in your portfolio can be daunting. That's why we've done the heavy lifting for you, scouring the market to identify the 6 best ETFs that offer a perfect balance of growth potential, income generation, and downside protection, the key ingredients for long-term wealth accumulation. Number 1. Vanguard S&P 500 ETF, VOO. VOO is an exchange-traded fund, ETF, offered by Vanguard that seeks to track the performance of the S&P 500 index. The S&P 500 index is composed of 500 of the largest publicly traded companies in the United States, spanning various sectors of the economy. VOO provides investors with exposure to a diversified portfolio of blue-chip U.S. stocks, including well-known companies such as Apple, Microsoft, and Amazon. As the S&P 500 index is considered a benchmark for the overall performance of the U.S. stock market, investing in VOO allows investors to gain broad exposure to the domestic equity market. With its low expense ratio and passive management style, VOO is particularly attractive to investors seeking long-term growth and stability in their investment portfolios. VOO is suitable for investors seeking broad exposure to the U.S. stock market with minimal costs. It is well suited for long-term investors who want to passively track the performance of the S&P 500 index and benefit from the growth potential of blue-chip U.S. companies. Number 2. Invesco QQQ Trust, QQQ. QQQ is an exchange-traded fund, ETF, managed by Invesco that seeks to track the performance of the NASDAQ 100 index. The NASDAQ 100 index comprises 100 of the largest non-financial companies listed on the NASDAQ stock exchange, with a focus on technology and growth-oriented sectors. QQQ offers investors exposure to some of the largest and most innovative companies in the technology, consumer discretionary, and healthcare sectors. With its emphasis on growth-oriented stocks, QQQ is particularly attractive to investors seeking exposure to companies at the forefront of innovation and technological advancement. As technology continues to drive global economic growth, investing in QQQ allows investors to capitalize on the potential for outsized returns in these high-growth sectors. QQQ has a significant allocation to technology stocks, including industry leaders such as Apple, Microsoft, and Amazon. These companies are driving innovation and disrupting traditional industries, making QQQ a compelling investment option for growth-oriented investors. QQQ is one of the most actively traded ETFs in the market, offering high liquidity and tight bid-ask spreads. It is well suited for investors with a long-term investment horizon who are comfortable with the higher volatility associated with growth-oriented stocks. Number 3. Vanguard Growth ETF. VUG is an exchange-traded fund, ETF, managed by Vanguard that aims to track the performance of the CRSP US Large Cap Growth Index. This index consists of US large cap growth stocks, which are companies that are expected to grow at an above-average rate compared to other companies. VUG offers investors exposure to U.S. large-cap growth stocks, which typically exhibit strong earnings growth potential and higher valuations relative to the broader market. These companies are often leaders in their respective industries and have a track record of delivering above-average returns over the long term. By investing in VUG, investors can gain exposure to companies at the forefront of innovation and technological advancement, as well as those benefiting from changing consumer trends and demographic shifts. Despite its focus on growth stocks, VUG maintains a diversified portfolio of large-cap companies across various sectors. This diversification helps spread risk and reduce the impact of any single stock's performance on the overall fund. Number 4. iShares Core S&P Small-Cap ETF. IJR is an exchange-traded fund, ETF, managed by iShares that seeks to track the performance of the S&P Small-Cap 600 index. This index includes 600 small-cap U.S. companies, providing exposure to the smaller segment of the U.S. equity market. IJR offers investors exposure to small-cap stocks, which are companies with smaller market capitalizations relative to large-cap stocks. These companies often have higher growth potential and may be in the early stages of their growth trajectory, making them attractive to investors seeking opportunities for capital appreciation. IJR is suitable for investors seeking exposure to small-cap stocks with higher growth potential. It is well suited for investors with a long-term investment horizon who are comfortable with the higher volatility associated with small-cap stocks. IJR can be used as a core holding in a diversified investment portfolio or as a satellite holding to complement other investment strategies focused on large-cap or mid-cap stocks. Number 5. iShares Core Dividend Growth ETF. DGRO is an exchange-traded fund, ETF, managed by iShares that seeks to track the investment results of the Morningstar U.S. Dividend Growth Index. This index consists of U.S. companies that have a history of consistently growing their dividends over time. DGRO focuses on dividend growth investing, which involves investing in companies that have a track record of increasing their dividends year over year. These companies are typically financially stable, with strong cash flows and sustainable earnings growth, making them attractive to income-focused investors. By investing in DGRO, investors can gain exposure to a diversified portfolio of dividend-paying stocks that have the potential to provide a reliable source of income and long-term capital appreciation. DGRO prioritizes companies that have a history of consistently growing their dividends over time. These companies tend to be well-established and have strong fundamentals, making them less susceptible to market volatility. Number 6. Ark Innovation ETF, RKK. RKK is an exchange-traded fund, ETF, managed by Ark Invest that seeks to provide investors with exposure to innovative and disruptive companies across various sectors, including technology, healthcare, and industrials. RKK focuses on companies that are at the forefront of innovation and technological advancement. These companies often develop disruptive technologies or products that have the potential to transform industries and generate significant returns for investors. By investing in ARKK, investors can gain exposure to innovative themes such as artificial intelligence, robotics, genomics, and blockchain, which are expected to drive future growth and disrupt traditional business models. In conclusion, we've explored 6 diverse ETFs that offer unique opportunities for investors looking to build a well-rounded and prosperous portfolio. From broad market exposure to specialized themes, each ETF presents distinct advantages and considerations to fit various investment objectives. Remember, the key to successful investing lies in thorough research, understanding your risk tolerance, and aligning your investments with your long-term financial goals. Whether you prioritize growth, income, or innovation, there's an ETF to suit your needs. Thank you for joining us on this exploration of ETFs. If you found this video helpful, don't forget to like, share, and subscribe for more valuable insights on investing and personal finance. Until next time, happy investing.